guys, this is Claudia here from the Bookkeeping Experts. Welcome for one more week of education with QuickBooks Online. And today we're actually not going to talk too much about QuickBooks Online. We're going to talk to you about how should you pay yourself. Now, I wanted to give a disclaimer beforehand. This advice is not supposed to replace your CPA advice. Your CPA knows exactly your situation and what is best to apply to your situation. But this is some information that you can take to your CPA and verify if this is a good option for you or not. Okay, first of all, the question is, how should I pay myself? Should I pay myself a salary or owner's draw? Well, it all depends. First of all, you should be thinking about how you should organize your business. If you have an LLC, sole proprietorship, maybe it's time for you to turn into an S Corp and pay yourself a salary. Now, if your business net income is not sufficient to turn into an S Corp, and when I say not sufficient, it means probably less than 30,000. There's no magic number. Maybe you should just keep in mind that if you turn your company, your business into an S Corp, it is more costly to maintain and it's also more costly to file your taxes. But there are some advantages of turning into an S Corp. One of the advantages is that, first of all, if you turn the company, your business, into an S Corp, you will need to pay yourself a salary. Now, how much is the salary? It's a very good question. Now, if you pay yourself too much on your salary, you're going to be paying too much taxes. Now, keep in mind that you will be paying your regular taxes plus employer taxes, which adds up to about 15%, a little over 15%. If you have an LLC, you will be paying self-employment taxes on the net income of your business, which is also about 15.3% altogether. So the difference is that if you turn your company into an S Corp and you do what we call a 60-40, and by the way, this is on the Journal of Accountancy and also several accounting journal and materials talking about how you should pay yourself as an S Corp. A 60-40 means that you're paying yourself as a salary 60% of your income and 40% you're taking it as owner's draw. The advantage is that when you pay yourself a salary, you're going to be paying your taxes beforehand, and on the withdrawal, you're not going to pay FICA. You may still pay other taxes, but you're not paying your federal taxes, your FICA. And that's going to save a lot of money on the bottom line. Now, if you don't, like I said, if your business is not making sufficient to justify turning into an S Corp because of the cost of maintaining an S Corp, maybe you should maintain as an LLC or sole proprietorship, but you still can pay yourself a salary. And by the way, you can set up on QuickBooks Online or hire a company like ADP or Paychecks or whatever other company you'd like to pay. That is, in my opinion, the best way to pay yourself. One is because payroll is a very complex subject. And if you are paying yourself a salary and not filing all the taxes and paying your taxes on time, you can end up paying a lot of fees and getting in trouble with your state or with the IRS. So you want to make sure that all the files, all the forms are filed on time. And by hiring a company to do that, such as ADP, Gusto, Paychecks, or whatever company you want to do, or QuickBooks, they will file all the forms for you. And at the end of the year, they're going to send you a W-2. And you're going to receive a W-3 for yourself and all your employees. The advantage of that is that you're paying your taxes and every time you pay yourself a salary, and you don't have to worry too much about not not paying sufficient, or paying too much in taxes. Now, one thing that is important to notice is that in order for you to be able to calculate your 60/40, you have to stay up to date with your books to find out what's your net income. You can find your net income on your profit and loss. And of course, you want to make sure that not only is your books on time or up to date, but it's accurate. So that's why you should make sure that if you can't keep up with your books, if you can't do your books because you're too busy with your business, hire yourself a bookkeeper, an accountant, to keep everything up to date so you can focus on your business but have all that information handy. When you're planning your taxes, being able to know exactly where you are is essential. You want to make sure how much money the business is making. You don't want to overpay yourself, because when you overpay yourself, you're overpaying taxes and you're draining the cash from the business as well. So you want to make sure that you make the right choices for your business. Now, to maintain the business up to date, you got to understand exactly what's going on in your business, and make sure that you do or take advantage of all the integrations available, as long as those integrations are working correctly for your business. That means it's not duplicating your income, it's not creating more of a headache than accurate financials. All right, so I hope this information was useful to you. If you like this subject, please give us a thumbs up and subscribe to our channel. The majority of you that watch us weekly do not subscribe or have not subscribed to our channel as of yet. If you subscribe to our channel, it's going to help us. It's going to help us come back every week with more education on how to work on QuickBooks Online, how to solve common problems in QuickBooks Online, and how to manage better your finances and your business. We want to make sure that you can take your business to the next level, and we're going to be right there for you to support in everything you need. Thanks for watching. Really appreciate you taking the time to watch this content, and I hope to see you again every week. So subscribe, give us a thumbs up, and if you have any question, or if you'd like us to cover a different subject next time, write down below. I hope to see you next week, and until next time, keep on smiling.